9 months after Operation Sindoor changed India's strategic and economic matrix, and about 7 months after Prime Minister Narendra Modi signalled a new push for reforms with a clarion call for self-reliance and for Swadeshi at his Independence Day speech from the Red Fort in August 2025, we now have a big new push and a continuation of reforms by Narendra Modi for a new economy. Let's try and break down what this budget means for the economy, for consumers, for taxpayers, for the markets, and for business people. For the economy, here are 4 or 5 takeaways. First up, 1, the fiscal deficit is down to 4.3% from 4.4% last year. So the government is continuing its certain policy certainty on fiscal consolidation. The second, the debt to GDP ratio is down to 55% from compared to 56.1% last year. So there is policy certainty and a commitment to a fiscal glide path for fiscal stability. The capex is up to 12.2 lakh crores, the largest ever increase. It's from 11.2 lakh crores. So you expect a big push in the infrastructure for in terms of a stimulus for infrastructure spending across the economy. There is a push for new economy sectors. The sectors like AI, rare earths, data centers, and pharma. Total government borrowings are also up to about 17 lakh crores, up by roughly around 3 lakh crores compared to last year. So those are the 5 big takeaways for the economy. Now let's take a look at what does this mean for consumers, for you and me, and for our pockets. Number 1, duties on imported goods for personal use have been reduced by half. Now, there will often be a conflict on what is personal use and what is for business use. But essentially, if you go abroad and you come back with stuff from overseas, the duties are now going to be half. The second big shift is that TCS, for those whose kids are studying overseas, the TCS for overseas education or medical has been brought down to 2% from 5%. So that's a big fillip for anyone whose kids are studying overseas, or for those traveling overseas. What does this mean for investors and the markets? Here the news is tepid. STT has been raised from 0.02 to 0.05. Capital gains on buyback of shares by promoters have been introduced, and so that's on the negative side. On the positive side, expect movement on industrial and capital goods sectors because capex is up. Also expect movement in new economic sectors because there is a big push by the government to invest in those. Overall, I think overall trading volumes can get moderated. Already retail volumes have been down. We are at the lowest point in this January compared to previous years. So there is a sense analytically that retail volumes may well remain down. What does this mean for big businesses? What does the Nirmala Sitharaman budget mean for that? Number 1, tax holiday for data centers until 2047. Just last month, we saw big investments in data centers by big tech companies. The big investment by Google in Visakhapatnam, the big investment by Amazon, the big investment by Microsoft. The government is now giving a tax holiday till 2047. That shows you a clear strategic intent behind that. As far as SEZs are concerned, they are going to get a fillip because there has been a reduction in tariffs and better rates in SEZ areas. Finally, in specific sectors, there is a fillip for production-linked incentives in the electronic sector. 40,000 crores have been allocated for that. For biopharma, 10,000 crores for that. And TRED has treads to enable capital for MSMEs. So overall, there is a sense of movement across all new economy sectors, movement towards capex, some easing for consumers, but overall there is a sense, I think the government is, and also largely a movement towards fiscal consolidation, conservatism on that side. So overall, I think the government is reacting to the uncertainty in the external economic environment and keeping its powder dry as we go forward.